Welcome to Sarbanes-Oxley Implementation Step by Step. In the next 15 minutes, we'll walk through SOX compliance from program planning and governance through risk assessment, control design, testing, deficiency management, and reporting. You'll see how organizations build internal controls over financial reporting and prepare for auditor walkthroughs. This is a practical overview distilled from the full course. Let's get started. Let's start with the foundation. The Sarbanes-Oxley Act was enacted in response to major corporate fraud scandals. Section 404 requires management to assess and report on the effectiveness of internal controls over financial reporting. Before we explore implementation, here are the foundational concepts that every SOX program depends on. ICFR, Internal Controls over Financial Reporting, is the core of SOX Section 404. These are the processes, policies, and procedures that ensure financial statements are reliable, accurate, and free from material misstatement. Management must assess and report on ICFR effectiveness annually. A material weakness is the most severe type of control deficiency. It means there is a reasonable possibility that a material misstatement in the financial statements would not be prevented or detected on a timely basis. Material weaknesses must be disclosed publicly. SOX Section 302 requires the CEO and CFO to personally certify the accuracy of financial reports and the effectiveness of disclosure controls. Section 404 requires management to assess and report on the effectiveness of ICFR, and for large filers, the external auditor must also opine on these controls. A control walkthrough is where auditors trace a transaction from initiation through processing to recording in the financial statements. They verify that each control point operates as designed and documented. Walkthrough readiness is critical for a successful SOX audit. SOX implementation follows a structured life cycle from planning through reporting. Here are the 6 phases. Phase 1 establishes the program. Define the SOX charter, determine scoping and materiality thresholds, set up governance with a SOX steering committee, and align stakeholders across finance, IT, internal audit, and business operations. Phase 2 assesses risk. Identify financial statement risks, map them to business processes, scope IT general controls that support financial systems, and build a risk register that drives control design decisions. Phase 3 designs and documents controls. Define control objectives for each significant risk, write detailed control descriptions, create process narratives that show how transactions flow, and build control matrices linking risks to controls. Phase 4 tests whether controls work. Develop test plans, select appropriate samples, execute tests of design and operating effectiveness, and collect evidence that demonstrates controls functioned throughout the period. Phase 5 handles deficiencies. Identify control failures, classify their severity as deficiency, significant deficiency, or material weakness, develop and execute remediation plans, and retest to confirm the fix is effective. Phase 6 closes the cycle. Prepare the management assessment of ICFR, support CEO and CFO certification under Sections 302 and 404, coordinate with external auditors, and maintain dashboards that track compliance status throughout the year. The heart of SOX compliance is designing effective controls, testing them rigorously, and managing deficiencies when they arise. SOX programs use several types of controls. Understanding each type is essential for effective design and testing. Preventive controls stop errors or fraud before they occur. Examples include segregation of duties so no single person controls an entire financial process, approval workflows requiring management sign-off, and system access restrictions that limit who can initiate, approve, or record transactions. Detective controls identify errors or irregularities after they occur. Examples include monthly account reconciliations, variance analysis comparing actual results to budgets or prior periods, and automated exception reports that flag unusual transactions for review. IT general controls ensure the technology infrastructure supporting financial processes operates reliably. These include change management for financial systems, access provisioning and deprovisioning, backup and recovery procedures, and job scheduling for automated financial processes. Entity-level controls set the governance tone for the entire organization. These include the Code of Conduct, Whistleblower Program, board and audit committee oversight, and the enterprise risk management policy. Strong entity-level controls can reduce the testing burden on process-level controls. Control testing follows a structured process from planning through evidence collection to deficiency evaluation. Start by planning tests. Define the scope of testing. Select the methodology for each control type. Determine sample sizes based on control frequency and risk, and establish a testing timeline that allows for remediation before the audit period closes. Test design effectiveness first. Verify that each control is properly designed to address the identified risk. Review control documentation, interview process owners, and perform walkthroughs to confirm the control would prevent or detect misstatements if operating as designed. Then test operating effectiveness. Select samples and verify that controls actually operated consistently throughout the testing period. Examine evidence such as approvals, reconciliations, system logs, and review sign-offs to confirm controls functioned as intended. Finally, evaluate results. Classify any control failures by severity, deficiency, significant deficiency, or material weakness. Determine root causes. Develop remediation plans with accountable owners and deadlines, and schedule retesting to verify effectiveness. Understanding common mistakes helps organizations avoid the most frequent causes of SOX failures. Common pitfalls include overscoping by testing controls that are not financially significant, poor documentation where controls exist but evidence is insufficient for auditors, late testing that leaves insufficient time for remediation, and neglecting IT general controls so financial system changes are not properly managed. Best practices include risk-based scoping focused on material accounts, continuous documentation maintained throughout the year, staggered testing spread across quarters to allow remediation time, and integrated testing that coordinates IT general controls with business process controls. Let's close with the most important lessons from SOX implementation. First, SOX requires management to personally assess and certify the effectiveness of internal controls over financial reporting. This is not optional for public companies. The CEO and CFO sign off on the accuracy of financial statements and the effectiveness of controls. Second, risk assessment drives everything. Effective SOX programs scope controls based on material accounts and financially significant processes, avoiding the trap of testing everything regardless of risk. Third, testing must verify both design and operating effectiveness. A well-designed control that does not consistently operate throughout the period is a deficiency. Evidence must demonstrate that controls functioned as intended across the entire reporting cycle. And fourth, deficiency management is critical. When controls fail, classify the severity accurately, remediate promptly, retest to confirm the fix works, and report transparently. How you handle deficiencies matters as much as how you design controls. That wraps up our overview of SOX implementation. In the full Udemy course, you'll get detailed lessons on program planning, governance, risk assessment, control design, testing methodology, deficiency management, reporting, and a capstone project where you implement SOX end-to-end for a model company. Use the course to build your compliance program with confidence. Thank you for watching. If this overview was useful, subscribe for more finance, audit, and compliance content. See you in the course.